Let's have an honest talk about the crypto cycle. I want to show you this Raoul Pal post that came out a few days ago, friends. It's extremely important. I think it's just for everyone to basically collect their thoughts and see. This is in the heat of the moment of everything exploding. I know no one wants to hear these bullish ideas, he says, and everyone wants to fling poo from each other, friends. You see monkey from a poo, they fling it, and they just throw it around. If you're lucky, maybe you catch one. And he said, the road to Valhalla is actually getting close. He said it, not me. He said it, heard him for a squirtin'. All right? And so he continues, friends. He goes, if global liquidity is the single most dominando macro factor, we must focus on that. And it is true, friends. You know, when we look at the global liquidity chart and we see like a lot of these, you know, explosions and stuff, because we're always wondering like, hey man, where's the part where the cryptocurrency of the Bitcoin goes up? Why are we pooping around? We always ask these questions because it's, for some reason, friends, it's just like as soon as people start to focus on it, it just loses its edge. It's like there's some sort of shaitan watching where they just curse it. Remember, friends, Natalie Brunel went onto Fox News right on the last day that the global liquidity stopped working. And she went to Fox News and said, hey, look at this. Bitcoin follows this chart up only. It's going up to 150. So easy. Let's play some Pumpy G music. We saw it. So, Raoul Pal. Remember, the only game in town is rolling $10 trillion of debt. 10 trillion. It's true, friends. They have to roll that debt. We say debt here. How do they do it? You got to print money, bro. Where are you going to get the money from? You're going to tax your population? Good luck. Do you know how much you have to tax the population, though, to get your 10 trillion? You literally turn the population to slaves for multiple years. People are going to riot with their spoonies. They say, hey, it was my great-grandparents that spent all the money. Why am I a slave for you to pay off their debt? There's only one way out of this, man. They have to print money. They have to print money. That's why a lot of these like shakeouts feels like they're just so engineered, man. Like you just, like we know you're going to print. Oh, that's why you got to believe, friends. You got to be careful of leverage. Remember what happened to Stream Finance as well? $93 million down because like, everyone thought they were comfy in stable coins and earning yield there, getting 10 to 15%, blew up. Be careful. Raoul Pal continues. Everything else is a sideshow. This is the game for the next 12 months. He's talking about the money printing. The money printing. They must roll off the debt. Remember, when we talk about the 4-year global liquidity cycle, okay, that is the 4-year cycle. It's just they didn't do it on the 4-year mark. They rolled over. They did 5-year bonds back in Joe Biden because rates were so low. All right? And here we are, coming due. Raoul continues. Currently, the government shutdown has forced a sharp tightening of liquidity as the TGA builds up with nowhere to spend it. So I just want to show you, friends, we go through these periods of time where we don't have these full certainty of what's going on, but you do your best to navigate it. And sometimes if you look too much in the information, you look too much at the leaves, you miss the forest. All right? Like we know the macro big charts, friends, like nothing can stop this, okay? That's why I show you this chart. Look, this is global liquidity over time. It's going up over time. It seeps into the economy. It seeps into crypto risk assets. It does. But, you know, like it gives you hell along the way as well. Like, you know, the chart's going up, but like, man, it like takes your lungs, your toes, your toenails, your foreskins, your 3 skins, everything. The volatility is insane, man. We call it volatility. It just feels like it's over every single time. But still, we have to press on. Raoul continues. This is not offset by the ability to drain the reserves repo. And he says QT drains it further. So you remember, friends, when we're talking about QT and the US Fed stuff, they've always had that balance sheet, which they now add. And remember, I know that no one believes until we're freaking pumping, friends, but the other, like, this balance sheet, dude, it's just money printing for Ghazi. Okay, they added this balance sheet. They're trying to revert it out, and they're going to have to put it back, dude. Otherwise, the economy's going to zero. We know they have to do it, you know, but it can give you pain along the way. He continues as well. This is hitting markets, and in particular crypto, which is the most liquidity driven. TradFi asset managers have had one of their worst years of performance versus the benchmark, and they are now having to chase markets that is allowing tech to be more stable than crypto. 401k flows help too. If this liquidity drain keeps going longer, stocks will get hit hard too. However, and remember, friends, do you remember the Donald Trump where they did the big signing where they're going to allow 401k, 12.5 trillion of them to be able to buy crypto? So people can put in like 1 to 2% of their savings. That's still on the horizon. That's $250 billion coming into crypto. That adds a couple of trillion market cap, by the way. Because for every dollar you put in, you get like 5 to 10x of the market cap. Because that's real dollars coming in. It's full dollars, right? He says, however, as soon as the government shutdown ends, the Treasury begins spending $250 billion or $350 billion in a couple of months. So that's what we have to look forward to now. $250 billion or $350 billion in a couple of months. He says QT ends and the balance sheet technically expands. The dollar, the US dollar Aduni, will likely begin to weaken again as liquidity begins to flow with these tariff negotiations. And they will have largely been completed. As we got to see as well, the US dollar Aduni has been giving us a bit of pain. Not that everyone's really paying attention, but it has been on this bull pump, which you've been watching. Okay, it looks like it's trying to reverse up here. Okay, we're hoping that it kind of like settles down. Also, with the US economy as well, friends, the higher the US dollar goes, they just print more. But you're bidding up their Ponzi. They just crank up the yield. Imagine you were handing like 5% yield out to a coin, and it went from $1 to $10. You're like, wow, there's so much demand. Okay, I'm just going to hand myself 20% yield. You see? That's what the US dollar does. But we don't think about it that way because it's risk off. Raul continues. Ongoing bill issuance, which is US Treasury bill, will increase and it will add more liquidity via the bank balance sheets and money market funds and stable coins. Remember, stable coin super cycle. Then there will be ongoing rate cuts. And we're going to have economic weakness and stuff probably coming out from the data, everything. The SLR changes. We have the Clarity Act. Man, it just seems like all of these things coming. We're like, man, we've been going through, waiting this like forever. Roll continues. The big, beautiful bill then kicks in to goose the economy into the midterms. The entire system is now being geared towards a strong economy and strong market in 2026 for these elections. So we've seen, friends, with New York, Zohran. Now that Zohran was doing the upset wins, it makes you maybe wonder, maybe Trump's like, okay, crap, we have to be serious about these midterms. We got to make sure we get them. Because usually what happens, friends, because Donald Trump had like that super red wave, there's usually people who are like, oh man, I voted for change. I didn't get it. I'm going back to Team Blue. You know, that happens on both sides. China will continue to expand its balance sheet. Japan, home of Pokemon Island, will strengthen the yen and fiscally stimulate. Also, hopefully they stimulate in other ways too. Family-friendly ways. The business ISM will rise as rates fall and tariff uncertainty drops away. Please, for the love of God, be right, bro. We've been hearing these ISM, this freaking ISM, bro. 36 months bad. 36 Black Swan. We literally got Black Swan. 140 years of data. Just so happens, our cycle, when we're trying to make something for ourselves, we get the worst PMI in literally human recorded history. The worst streak. But we have to take it on the chin. What else are we going to do? I'm not clicking sell and leaving. They can go stuff themselves. Soy boys. You just need to go through the window of pain and the liquidity flood lies ahead. Remember, don't truck this up. Wait out the volatility. Drawdowns are common. You can say that again. And buy the dip whenever you can. So, you know, that's why he's got the chart. Too long didn't read. He goes, you know, that global liquidity chart, friends. Look, this thing is just powering everything over time. But you got to remember, look at the time frame we're looking at. We're looking at years here. You know, we're looking at years, right? Look, that's why, friends, you know, when we look at zombie virus, they really engineered something and it really accelerated it. And now they've been pulling back. So I'm really hoping that we get to see some sort of nice explosion on the upside again. And that will obviously correlate with crypto boosting up. But you and I, we're caught in the middle, man. It just, you know, it gets very controversial when you're just thinking about trying to throw in the existing models of what we think crypto behaves like, you know, 4-year cycle, yada, 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 and then navigating the future when you know you've got undeniable stuff, friends. We have the ETFs here. There's new whales, dude, okay? And I know everyone's saying this time is different. Habib, yes, we went from retailers in Bitcoin to now institutional players. They use EMAs, okay? They correlate with the NASDAQ. They have portfolio hedging. They know what hedging is. They rebalance stuff. Yeah, they price things differently. They don't FOMO buy, clip things huge because they're only throwing in 1 or 2% of their funds and they're DCAing over like a period of time. It changes the whole price action structure. Back then, crypto, we used to do these big parabolic pump ups and dumps, right? That's what happens. Also, friends, what I'm going to do, I'll just show you something, okay? And if anyone asks you about this, you put your pants back on and you tell them your friend Tommy sent you, all right? Friends, crypto and stocks move differently, okay? Stocks move like this. See that? Stocks move like this. Up, down. So up 3.5 years, down, boom, like that. That's how stocks move. That's actually the S&P 500, the NASDAQ. That's what their charts look like. Crypto does not move like that, friends. Crypto moves inverse. Wee, wee, wee. It's all over. See that? Different. Crypto gets very volatile at the tops. Retail comes and buys the top. We have very low volume periods where everything dies. All right? But stocks, their lot of bottoms are high volatility. The VIX spikes here. Okay? There's different players. So you got to think about this. Crypto, which traditionally moves like this, you're now seeing it in Bitcoin. It doesn't have these parabolic things, does it? All right? So think about this. You are getting players who, their footprints in the world, okay, their footprints are this. Okay, we actually have to make this another color, friends. I apologize. There's so much green on the chart. There you are. So we've got players who make these price actions. All right, they are now going to be in our BTC, in our crypto. Okay, so over time, there's going to be an adjustment period. Okay, where we're going to get less pointy and more rounded. Obviously, we saw it in Bitcoin, started in 2021. So more things will start to have that over time, especially as we get the ETFs and everything out here. But we can't deny it, friends. We've been hurting for a squirtum for a long time. We're still going to make it, though. Like, subscribe, belly button, or catch you in the next one.